GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to the weekly webinar. Well, what a week that was for cryptocurrencies. Billions of dollars of value wiped off last week, and it's gotten a little worse as of Sunday. Seems to be improving a little bit at the start of the new week, but Bitcoin definitely experiencing a major rout, and it tends to be worse for most of the altcoins as well, including number 2 Ethereum. Even though interestingly Goldman Sachs they came out with a couple of interesting notes. One that Ethereum will eventually overtake Bitcoin, and the other one is that oil will touch $80 a barrel. We'll obviously touch both those markets today. Aside from that, it's a situation where we're still grappling with the idea of higher inflation and how that will affect the US dollar. We did see some dollar strength at the end of last week, but still more or less in a dollar downtrend. All right, let's explore some of that in more detail. I'll start off with the Forex markets as I typically do, then move on to commodities, and then touch on indices and cryptocurrencies. If there's anything else you'd like me to cover, please drop a comment in the video. We'd be happy to do that. Otherwise, please click that like button. Just give it a quick click, and that really helps spread the word about the video for the YouTube algorithm. Okay, here we go. Here's the Euro chart. So what I think probably is more significant here is that this, if you strip out some of the, if you basically go off closing prices, because we're on a daily price chart here, and you strip out some of the highs and lows, I think probably this was the major resistance to the euro, and it was about 121.50 and change. Call it 121.70, something like that, depending on the price feed that you have. But on our charts here, about 121.70. And then we rallied up, broke through that, and we tested the actual peak from the 25th through 26th of February. And we've been gyrating between the two with some quite large wick candlesticks, a distance of 122.40 down to 121.70. So trading in a 70 pip range every day, which is relatively high by Euro standards for a few days in a row. The trend remains higher, and we've got a pretty neat trend line in here. So we're back above the 200-day moving average. This correction seems to, this is not the major price action anymore. This uptrend here is the major price action. Hence, we've got the trend line there. And if we pull down to a 4-hour chart, you can see the trend line is pretty neat. Quite neatly goes through the lows. It's a little bit troubling at the moment. We have what, if you can see on the 4-hour chart, those long wicked candles, 70 pip range candles, have formed so far something that looks a little bit like a double top. But as long as this neckline doesn't give way, or if it does, but we pop down to the trend line and hold it, we're okay. And especially if we get another rally over the next few days, and actually it's just a sideways trading range, then that's perfectly fine and normal. And we'd be looking for a breakout of the range to the upside in line with the trend. So it seems to me, based on the idea of this being a major area of resistance that has broken, holding the rising trend line above the 200-day moving average, all the evidence is of an uptrend in the euros, and something you generally want to be bullish on. But we can caveat that by saying that if we do get a drop below this rising trend line, that's a reason to turn a bit more cautious, and it'd be a sign of the uptrend unwinding. Moving swiftly on to the British pound, similar sort of situation here, where we had also a line of resistance which was held for a while. We got a pullback. That was all very neat. I mean, this was if you're able to get this entry, this was just pinpoint perfect technical analysis. Resistance, breaks to the top side, acts as support, buy at the old resistance, now in support, and sell it up to the next resistance point, which we've missed by a couple of points. But you wouldn't want to target the actual pip top. You want to target somewhere a little bit below if we're talking about trading targets. So that was a very neat trade. Now we're hanging out below that which was a multi, I wouldn't say multi-year, it was a multi, let's see now a little bit. So yes, it was 2018, April of 2018 when we were last at these levels. So two-year highs. So we're looking to try and break through these 2-year highs. Obviously, you can see on this weekly chart that the risk is that after that big reversal and we've got up hit to the peak again, the risk is we're just facing a double top here and we just roll over. Similar kind of picture here on the long-term chart, which I've mentioned several times. This was the kind of ceiling for the pound for a while, and we have broken above it, but we've got a fair way above this previous resistance. So there's a chance the price could pull back again. But I think while we're above this 133, basically, we look pretty long-term decent in the pound. But obviously, you could have a sustained multi-week sell-off, and we could still be above 133. So that's just a kind of longer-term perspective to be optimistic on the pound. We're just watching this double top possibility at the moment, and then trying to think about how far that can actually go. Okay, moving on to the yen. Literally nothing's happened in this chart. You know, we talked about it being a sideways range last week. We literally just tagged the top of the range and just drifted down. We've not even touched the bottom of the range yet. So in terms of trend directional trading, this is rather tricky at the moment. And I think I mentioned, you know, last week that it's a little bit hard to say which way it's going to flip. We did seem like we broke above this rising trend line, but we've stalled since, which is not a great sign, you know, but we're more or less holding on to that trend line. So we had obviously 3 huge weeks, so a bit of a consolidation would be natural, and that's kind of what's happening right now. And my best guess from this technical scenario here, given the strength of this surge, given the break of the declining trend line, is that we're setting up for the next leg up. But of course, you know, that may not be the case, and we are still more or less in kind of sideways rangy type scenarios here, and it's possible we just drift continually back down to the bottom of the range again. Moving on to the Aussie dollar, so we're, you know, similar lack of price action really in the Aussie as we mentioned in the yen. We're holding on to this support. Now it's pretty clear we might get a drop through this support. I think if you're trading the break below this support at this stage, it's become very obvious. So I think you probably want to be trading with a bit of extra confirmation, something like a daily close below the level, some kind of percentage mark, however you use it, just to give an extra bit of confirmation the level has actually broken. Because I could see this being one of those kind of scenarios where you have a intraday break of the level, a bunch of stop sell orders are triggered, and then the big boys step in, use those sell orders to buy up and push the price higher again. So look out for that. If you do get you know, a long wicked candle down through this level and then closing up above it again, I would say that would be a good bullish sign, and a sign that we're up to test this level and then probably this high, and then probably the next high is up at 80 again. Right, moving on to the precious metals markets, and good old gold, starting off on our weekly chart here. We'd mentioned this as a potentially problematic level last week before we got here. It has turned out to be, although gold, it's paused at this area, which is the 50% level of the decline since the record high. And so it's paused, but it did more or less close the week above the area. And you can see on the daily chart in a bit more detail that it put in this kind of long leg doji, and then it's put in a few higher candles since, but still within the range of that long leg doji. So not out of the woods yet. You know, if we get a huge downdraft through here, I would say that's probably a sell signal, because I consider this quite an important level. But I think even if that were the case, again, looking back at our weekly chart, just judging by the weekly closings of the candlesticks, the opens and closes, rather than the kind of choppy intra-week activity, I think we can say that this correction has ended. That's my best assumption of the scenario. There's not a great channel to be drawn exactly, but you can see it does go through the lows, and it goes through these. If you ignore the highs, you can actually capture quite a neat little channel here that actually does work for the lows. And I think we've broken out the top of it, and I think we're turning into a more bullish phase for gold. But it's natural that we'd obviously have a pullback at some point after 3 good solid weeks. This is quite a big resistance, so let's play it as a generally bullish overall market that's due a bit of a pullback, and we're at a resistance level. So piecing all that together, this is probably not the greatest entry point for gold, but if we do get a breakout and a pullback to this area, that would be much better. Similar deal in silver. I'm down on the 4-hour chart here just because I think if you are feeling like you think these precious metals markets are due a bit of a sell-off, silver might be the place, because I kind of ruined it with my Fibbo here. Okay, let me show you the shorthand first. Basically, if we got a bounce from here, you can see that where there's been a lot of price action through these highs and lows is also the 61.8% retracement of this drop. And this is a 4-hour chart, so a bit shorter term. If the price bounces up here, runs into this 61.8 and rolls over, I think that would be interesting. Just because, and now I can show you, we had a big weekly reversal from not exactly, but more or less from the level that I drew in last week, based on the weekly closes. You remember I had the weekly closes level, and then I had the weekly highs level up here, and it's put in a big bearish pin bar reversal on the silver chart from those weekly highs. So I just think if we do get a little bit of a bounce, here's my level in that you can see that looks very tiny on the weekly chart. If we get a little bounce up towards the top of that pin bar again, it'd be a potentially decent risk reward because it's a big resistance. We've already had some signs of bearish resistance from this weekly candlestick pattern. You'd basically be trading the resistance after some confirmation. It's a decent bearish setup, even though we're above this rising trend line for now. The alternative would be wait for a move below the rising trend line. Given that we've already had this bearish candlestick on the weekly chart, maybe we get a bounce from here and then roll over under the trend line. Again, you'd be later into the move, but it's a different way of trading it if you do think that basically that weekly candlestick from resistance is going to set up a period of weakness. Maybe we have to go down and test 25, the round number again, or something like that. Right, keeping on the commodities theme, we had this breakdown of a big rising trend line in oil last week. There are a few different trend lines to draw here, so there's not, there are different conclusions to be reached, but I think for most of them, the trend does seem to have been breached. It just depends how much. I think if we just drew this last one, it's just about clinging on. Well, yeah, even there it broke a little bit. So depending on how you're drawing these trend lines, we've had a breakdown in oil, and it happened after touching a huge area of resistance at the 67 level. Now again, Goldman, for what it's worth, Goldman Sachs are predicting $80 oil, and we're obviously at 67 now, so that'd be a nice little rally were that to occur. I'm of the view that it looks like we were in for a bit of a deeper correction in oil, but I'll be happy to say that I'm wrong. If there's a break through 67, that would be confirming the trend with a break of a big level, and I think we could see a lot more upside after that. But while below this level, it looks a little bit dicier to me. And there is talk about lots more Iranian supply coming back into the market again, and still some uncertainties about the demand recovery, given the Indian variants, etc., etc. So I think there's possibly enough doubt out there to unwind some of this big rally. But again, could be wrong. And if we are, we'll probably know we're wrong about any kind of bearish ideas on oil if the price moves up through 67. Switching gears to the S&P 500, not changed this chart a lot really. We talked last week about how the RSI divergence worked pretty well with those 3 deep days of sell-off. Then we had 2 days of recovery at the end of the previous week, and then last week was literally just down and up again. So we didn't really do too much. What you could say is that in this correction, we haven't touched 4,000, the big number. We sold off here to 4,050. We rallied up a bit. The next time we dropped, we pretty much, we came close to the lows, but we in effect, on a closing basis, held on to 4,100. So I think given the overall bullish market, you could probably assume that we're going to look, that looks a bit strange, but what can I do here? You can see the pretty clear resistance in here. I think it's probably a fair assumption that if we get a break through this resistance on a short-term basis, we're going up north of 200 again and up to test and probably make new record highs. But just wanted to point out that basically that bearish, the bearish RSI divergence is still sort of in play. And were we to get the record highs, we could just bang into the same rising trend line through the highs again, and then we'd face the next setup. Is this next high going to be a lower high on the RSI and a higher high on price, and just a third RSI divergence? And would that be the one that sets up a deeper sell-off down towards this rising trend line potentially? So still got that in mind, but also a break of that short-term resistance, given that we're putting in higher lows, it's probably bullish in the short term. Last but not least, how could I have left it to the end given the craziness that's happened? Well, that is just how I normally do it, and that's how I did it again. But this is our daily chart, but it's quite zoomed out. Let's have a look at the weekly chart, and you can see why I'm looking at it. This was the all-time high from back in 2017, well, December 2017, and 2018 was the big rout in Bitcoin, where it lost 85%. And you can see that, interestingly, could be the next level that we target on the downside. So the top was 65, this bottom is 30. Another leg down will basically take us to, that was the previous highs, but basically 20. 20,000 comes in just a tiny bit above it. A bit hard on the weekly chart, but you can see is negligible. Basically, that old resistance from the old record high back in 2017 could turn into support if this route continues. I tend to think that probably we could see a lower low here, but I would be surprised if it got down to 20,000 again. It's possible. We can't underestimate the power of governments and states, and when we start talking about extra regulation or banning or greater scrutiny on taxes of the crypto market. I think that is something people really do watch, and so it could be another route down to 20,000. But I think, moreover, just the bullish phase is probably over for now. We could get a quick rip up to 50,000. I certainly wouldn't be surprised to see that. For those, looking to try and buy a dip, that's certainly possible. But I think probably we don't get up to 65,000 for a while. I think we chop around for a while. And then we'd see where it takes us. I think probably a lot of the bullishness has come out of the market, and it will take a while for it to come back again. All right, that's it. Thank you very much for watching, everyone. Good luck trading this week, and make sure to subscribe to the channel so you don't miss next week's episode. Thanks, everyone.